Hey viewers, welcome back to RHO Market Chat. I hope you enjoyed the very first episode. People have been telling us they love our program, so we are back. So let's have Robin to give us a recap of what we want to discuss last week.
Well, welcome back. Let's recap what I said to you last week. Well, last week I said that the dollar index have hit a high, and according to our plans, the dollar index will continue to come down, and as the dollar comes off, the stocks on Wall Street will also similarly be under pressure. And last week I spoke about why it is important to be watching the volatility index. Many people have used this volatility index differently. For me, the volatility index is a signal of a trend change. And looking at the volatility index, we had many volatile markets, and volatility has spiked up many times, and many times this spike have turned out to be only short-lived. The only time that we had volatility that lasted a long time was in 2008, and that turned out to be the start of a bear market. So this time around, we have volatility index that started about 2 weeks ago and is still persisting. So watch the volatility index. If it stays elevated for a longer period, we could be in for a real bear market this time around after a 10-year bull run. This was the chart I showed, and this was where we were last week. And I said that Dow Jones have hit a important support level at 24930, and we could see a rebound to this area at 25900, and that's exactly what happened last week. Dow Jones rebounded to 25900, all right, maybe slightly above, and then it retraced. So this week, I want to further dwell into this chart later on this program and share with you my insight where the market is heading. The 10-year Treasury bond yield is showing extreme fear. We have had the Treasury yields coming so low, and it is breaking all-time low, and that is showing that investors are fearing the outcome of the economic downturn caused by the COVID-19. All right, so let's start with this week's market chat.
So Robin, last week you were spot on about the financial markets turning bearish. And you were very prudent, and you informed our investors that they need to be careful and not be overcommitted in trying to buy in blue chip companies at heavily discounted price, as prices are falling off the cliff. You told our viewers to actually park some of their funds into safe havens like gold to combat against any possible volatility and uncertainty. So this week we have an additional dimension where you have Russia and Saudi Arabia actually going heads-on the oil price war, which severely impacted our financial markets as seen today outside of trading hours, where the futures indices were being stopped by the circuit breaker being set up for all the major US financial indices, the Dow, the Nasdaq, as well as the S&P. What are your thoughts about it, and what will the trading environment be like for the week ahead?
Well, Ruben, I think you're absolutely right. This week we have an added dimension, or I should say, an added headwind to the market. The previous week, the markets were tormented by the spread of the virus, and investors were fearing that the spread of the virus could cause the global markets to go into recession. Well, yesterday we had a new headwind. Russia, which is the ally of the OPEC, did not agree with Saudi Arabia to cut production. Saudi Arabia retaliated by announcing a very drastic measure to increase production and thereby hurting the Russians' market share in the oil market. Now, so with this added headwind, it's important for investors to be watching now another chart, and that is the crude oil chart. So as long as crude oil is weak and it's coming down, I think the market will continue to be weak. Well, yesterday's action by Saudi Arabia is very radical, and it really throws the market into a period of uncertainty. All right, just looking at the crude oil chart, right? Today we had the crude oil falling about 10%, hitting a low of $27, and as of now it has rebounded from 27 to 32. But it's important to be watching here. So this is the $27 mark, and the $27 mark is a very important long-term support. But I think we're going to break it. So if we break it, we could see 25.90, and if 25.90 is broken, we could see 20.65. Why am I so bearish on the crude oil? And the reason is because, right, historically, the crude oil market has been accustomed to more to supply shock than demand shock. But today, with the coronavirus, we have demand shock that comes into the market. We have people traveling less globally. Especially in China, we had a reduced demand for jet fuel, reduced demand for public transport, and many other forms of transport that causes the lower demand to crude oil. So with this, we have a demand shock that came into the market, but yesterday we had a supply shock. So now we had a demand shock and supply shock. And that is why I don't think that the crude oil market is going to go up anytime soon. It's going to go through a period of volatility, and I expect a little further weakness. And because I expect a little further weakness in the oil market, correspondingly, we should also expect a weaker stock market. Well, how will it affect Dow Jones, which is the global leader of the stock market? Remember, the Dow Jones hit a low of 24,680, and then it rebounded. All right, it rebounded, and as of now, when I'm talking, the Dow futures has limit down, and it is trading very close to 24,680. Well, this is a very important level because all the computer programs, all the institutions, all the traders, they are watching this level. They are all putting a stop here, a program stopped. If this is breached, right, we could see the Dow falling to my next support level at 23,950, and at 23,950 it will bring Dow into a bear market territory, and a definition of bear market territory would be a 20% fall from the top. So at this level, 24,680, it's only 15% another 5% fall will be hitting the bear market territory, and I believe that the market is going to test that bear market territory. So I'm bearish on the Dow Jones. I think it could continue to fall. And as I said the last time, in the last episode, for the Dow to complete the whole cycle, we could see falls up to 21,591, and that will be a very strong support. At 23,930 is also a strong support, and we could see a little bounce from here. Well, what about closer to home, our Straits Time Index? I have many questions asked about Straits Time Index. I remember that I showed this chart before, and I said watch 3,100. And 3,100 will be a break. If 3,100 breaks, all right, we are in for a hard time on the Straits Time Index, and it broke, and today it hit my support level here at 2,750. All right, I believe with this continuous weakness, it could break, and if it breaks, our next support will be 2659, and a stronger support level will be 2523. And if this bear market route turned into something very, very ugly, it will be 2188, and that will be my conviction support level, and I believe at this level the market will have a good rebound.
Viewers, in this episode, we will add an additional segment known as Robin's Chart of the Week.
Well, welcome to the Chart of the Week. I thought I have an interesting chart to show you, and we also could learn a lot from this chart. And well, it is none other than Tesla. This stock made a phenomenal move from 250 level, hitting close to 1,000 level, and then it corrected. So what I want to point your attention is in reading price action. It's very important to be watching volumes, and this was where Tesla had a big boy footprint. What is a big boy footprint? It shows that there's a sudden surge in price and volume, and we had this sudden surge in price and volume roundabout in October 2019, and nobody paid attention to this. All right, it went sideways for a while, and boom, we had a bull, one of the biggest bull run for U.S. stock. All right, it went from 350 all the way to close to 1,000 level, and it pulled back. So this is where I have been telling investors to be careful, because this is where we see greed coming in. And how do we know greed came in? Look at the massive volume. Everybody now was convinced here that Tesla will go higher, and that's where we see every investors piling into Tesla here. But Tesla has since retraced and have gone below this level, and that is why I'm beginning to get bearish on Tesla. All right, and I believe that Tesla will hit 592. Last traded at 703. We still have a big downside going on 592. At 592, we could see a rebound. All right, but this rebound could prove to be temporal. And if it breaks 592, we could see 497, and that will be my conviction support level. Well, I hope you enjoyed our session today, and I hope to see you back again.
Hey viewers, that's all we have for you in this episode. If you find our contents interesting, do share it and subscribe. Turn on the notification to get the most up-to-date latest episodes. Thank you for tuning in to RHO Market Chat. I'm your host Jordan, and see you all next week.
Well, interestingly, Donald Trump retweeted an image that somebody posted about him, and that image says, "My next piece is called 'Nothing Can Stop What Is Coming.'" Is there an ominous message behind this? Come for our next episode. Maybe something is happening.